Well, it's 9 o'clock. I think we should start. A very good morning, Frankfurt. Good morning to our guests from 11 countries and regions today. Frankfurt again is 1 hour ahead of London, and let's make the best of it. To stay ahead of developments, you certainly made the right decision to join us today. Dear ladies and gentlemen, welcome to the 35th Food for Thought event in cooperation with the Association of Foreign Banks in Germany. A very big thank you to our partner. Quite a while ago, the famous economist Rudy Dornbusch said, in economics, things take longer to happen than you think they will, and then they happen faster than you thought they could. I remember my time at university when we studied about carbon trading already. That was quite a while ago, as you obviously and unfortunately can see. And it describes the situation we face today very well. The multiple climate events happen all over the world in recent months have accelerated pre-existing trends at a pace we would have never imagined before. The EU vowed to become the world's first economic bloc to hit net zero greenhouse gas emissions by 2050 in an attempt to limit global warming. To achieve these aims, tougher regulation and emission standards for industry, carbon pricing, and taxes on polluters are the most important approaches. The EU set up an emission trading system in 2005, which requires large industrial polluters such as steel makers, power generations to buy carbon credits to cover the cost of their emissions. These credits are traded on financial markets and helped drive the cost of polluting to more than €55 per ton of carbon in July this year. And it topped even €65 a ton this month due to Europe's escalating gas supply crunch. How will the time pressure to reach emission reduction goals influence EU's carbon trading market? Will the current gas crunch crisis and the coming harsh winter convert energy consumption back to coal? We all hope not. Today, we are honored to have Hans-Jürgen Walter to address the topic of avoid, reduce, compensate, CO2 compensation as a key lever in today's net zero strategy. Hans-Jürgen Walter is leading the global sustainable finance practice of Deloitte, as well as the European Banking Union Center of Deloitte in Frankfurt. He has more than 25 years of experience in the financial services market and combines essential expertise to support clients in the development and implementation of the ESG agenda. Prior to joining Deloitte, he managed the banking and financial markets business of IBM and Capgemini in Germany and Switzerland. Hans-Jürgen is a regular speaker at key finance conferences in Germany and Europe, and he publishes also frequently. Dear audience, please feel free to input your questions during or after the speech in the Q&A zone in Zoom. The PowerPoint slides and the recording video of the speech will be posted on Frankfurt Main Finance website already from tomorrow. Mr. Walter, the stage is set and it's yours.
Yes, thank you very much for the kind introduction, Hubertus, and thank you very much for inviting me to this Frankfurt Main Finance webinar. It's really an honor to talk to such a selected audience today. So good morning, everyone from Frankfurt. So as Hubertus already said, there is probably no other topic which is currently subject of such frequent and controversial debates as the setting, financing, and achievement of sustainability goals. And under the title Avoid, Reduce, Compensate, CO2 compensation as a key lever in today's climate strategies, I would like to introduce a further instrument that is gaining more and more importance in this context, carbon credit trading. So as Huberto already touched as well, the end of 2020 marks a fundamental change in the global governance of greenhouse gas emissions. Because since 2020 or the end of 2020, the Paris Agreement provides the new framework for the global effort to fight temperature rise, which significantly differs in some topics from the approach of the Kyoto Protocol. The new key element is that the Paris Agreement requires all countries not only developed countries, all countries to communicate climate mitigation targets or actions in the form of the nationally determined contributions called NDCs. So the NDCs include type, ambition, and scope of the targets and sufficient information to increase clarity and transparency on the measures. And all NDCs together should achieve the Paris Agreement objective of limiting the temperature increase to 1.5 degrees. So all this requires that global net greenhouse gas emissions will need to fall to 0 by 2050, which leads, of course, to more ambitious targets and actions to reduce emissions. This development also has important impact on for the future role of and the feasible models of the voluntary carbon market, because the ambition of the Paris Agreement and the pressing requirements to meet its temperature goals presents an opportunity for voluntary action to complement governmental decarbonization efforts. Understanding future models for the voluntary carbon market and the potential for it to support efforts to address climate change is particularly relevant as an increased number of organizations and individuals are taking voluntary action to do both, to reduce their emissions and to offset those that remain via the use of carbon credit. I prepared some slides. Sorry, I forgot this. I prepared some slides to illustrate some of the things which I will tell you. So, Sophie, if you might share the slides now and jump on the second slide already, because I mentioned already the topics which I wanted to present at the first slide. So I'm on slide 2 now, Sophie. I can't see the slide. Yes, one slide further, please. Okay. Okay, thank you very much. So first, let's have a quick view on the carbon market. So I will cover today some fundamental stuff, and then I will look a little bit more into detail what needs to be done, and in particular, what does it mean for a trading infrastructure. So looking at the mechanisms which are basically touched on carbon markets. So there is once the well-known and established compliance market for carbon rights and the voluntary carbon market. In the compliance market, emissions trading systems are based on the tradable rights to pollute, which is known. In the case of greenhouse gas, we usually talk about carbon rights and carbon allowances. The carbon allowances are commonly used to achieve mandatory greenhouse gas goals or obligations by governments. So there are basically two levers to control greenhouse gas emissions via the compliance market. One is the reduction of number of allowances, and on the other side, the increase of the carbon price, which Hubertus already mentioned. And both are happening right now, as you know. These are the levers for the compliance market. A right gives its holder the permission to emit certain quantity of greenhouse gas, and the carbon allowances are issued to the regulated entities as a part of a cap and trade scheme. A cap and trade system, regulated entities obliged to release a number of allowances previously allocated to it whenever it has caused the emission of an equivalent amount of greenhouse gas. So polluters are required to hold permits in amount equal to their emission. Typically, the competent authorities grant such allowances to the regulated entity for free by using the information on past emission amounts. So the intention is a continuous reduction in the annual amount of emissions permitted, and the so-called scarcity of emission rights on the market increased trading between the entities. So some of them will incur the cost of reducing their emissions with a view to generating additional revenue from selling unused certificates, while others will incur the cost of purchasing additional allowances. The world's first international emission trading system is the European Union Emission Trading System, which you probably know, which is already set up 16 years ago, so in 2005. And just to mention it, the European market represents currently about 90% of the overall global compliance market value in 2020. Unlike, next slide please, Sophie. Unlike emission allowances, carbon credits do not constitute a right to emit a defined quantity of greenhouse gas. They are used as rewards for reducing emissions. So the greenhouse gas emission reduction can be done in two ways. The first one, to enable companies to reduce their current and historical carbon footprint, for example, by using less polluting technology. And the second one is to create a medium for financing carbon efficient and carbon removal technologies. So when a company decides not to use any alternative technology, or there is no further possibility for greenhouse gas emission with currently available technology, companies need to turn towards voluntary carbon markets in order to achieve their carbon targets. So the voluntary carbon markets allows businesses to purchase carbon offsets by directly financing projects, so which either avoid greenhouse gas production or decrease greenhouse gas emissions, and in that way produce carbon credits which are traded on the voluntary market. So project owners, which you see on the button of the left-hand box, identify, develop, and implement emission reduction projects like solar, wind, and reforestation, and sell them to the market. This kind of carbon offsetting has been recognized as an important tool for greenhouse gas reduction, which has resulted in an increasing number of companies participating in the market. I come to this a little bit later, how the market has developed during the last couple of years. So even though greenhouse gas emissions decrease is a primary benefit of the voluntary carbon market, I want to mention at least other important benefits which needs to consider. The first one is financing a project that would otherwise probably no chance to be started. So furthermore, projects are often launched in developing countries where financing projects have a much wider benefit in both emission removal and the entire community. And carbon trading also finance types of projects that are more oriented towards technology improvement and innovation. So as you know, there is always a discussion around greenwashing by carbon credit trading. From my perspective, it's a lever to push innovation actually. The incentives set by carbon credit functions derive from baseline and credit system. So this means that the reduction or removals of emissions are certified as the difference between the actually measured emission amount and the one that would have emitted in a business as usual scenario, so the difference and the direct impact of the project. According to the market expectations, the supply of carbon credits will mainly come from nature-based sequestration, avoid natural loss like deforestation, greenhouse gas emission reduction or avoidance, and technology-based removals of greenhouse gas emissions from the atmosphere. Besides being an important tool for greenhouse gas reduction, there are of course a couple of challenges for voluntary carbon credits that needs to be managed. I would like to touch some of them for the discussion after the presentation. So the consistent issue on the supply side is the quality of credits that are issued. It is extremely important to have well-defined criteria to award the project with carbon credit and verify it under one of the major standards like verified carbon standard or the gold standard, which you probably know. Carbon crediting standards establish rules and procedures that emission reduction projects need to meet in order to register and to receive carbon credits. So this includes, for example, the methodology for quantifying emission reductions, which is a huge challenge, of course, for different project types. Furthermore, standards intend to avoid issues like additionality. So this means that a project yields emission reduction that otherwise would not happen, and leakage. So that the project result, or does the project result in increasing emissions elsewhere outside of the project scope? So further challenges in the carbon crediting market are double counting, greenwashing, liquidity, and price information. So the possible risk from double counting of emissions reductions is perhaps the most critical issue. So double counting means that a single emission reduction is used more than once to achieve climate mitigation targets or goals. A key risk is that the same emission reduction is claimed both by the host country of the emissions reduction project to achieve his NDC, and by the purchase of the carbon credit to support a claim, it has offset the impact of its own emissions. This needs to be avoided, and I come to this in a couple of minutes, how we can avoid this. Greenwashing, I mentioned it already quickly. So voluntary carbon offsets are sometimes criticized, as I said, of greenwashing by companies that are not serious about cutting emissions and want to appear to be taking action on the topic. Greenwashing remains one of the biggest risks in forming a large and reputable market for carbon offsets. And in order to prevent companies from greenwashing, strong regulation, transparency, and a link to carbon emission is needed. So companies are expected to develop formal and concrete plans for reaching net zero emissions that focus on reducing direct emissions and to use carbon offsets only, and this is important, as an additional tool for reaching the target. In some sectors, the transition to net zero target is limited, of course, with the technology in use, and consequently, carbon offsets will play an important role during the transition, like utilities and energy sector, for example. So let me quickly look at the price formation, which is, of course, extremely important for a trading instrument. So, Sophie, if you could switch to the next slide, please. So, today, prices for voluntary carbon credits vary greatly across different geographical regions, project types, project maturities, and even project certification standards. But one of the most important functions of financial markets is to provide participants with reliable information about the value and the risk of the financial instruments that are being traded. So it's extremely important to converge this variety. So this goal can only be attained if market participants have confidence in the fairness and equity of the conditions under which price formation processes take place. On this slide, you see probably nothing, but what you can see is the prices for various project types in the columns. So the data comes from carbon credit resellers that purchase carbon credits from project developers and sell them at the retail price. And the price varies in a project type in one column from 50 cents per ton of carbon to more than $50 per ton of carbon. Though there is a huge stretch, of course, yes. And in general, transitions on over-the-counter markets, as you know, are more vulnerable to such market abuses than trading activities on organized public exchanges. Nevertheless, the most common reason of such a large price spread are usually significant information asymmetries and insufficient liquidity in the market. So these are the two topics which needs to be solved in order to give more confidence in the price formation. So one of the demands that can be immediately derived from this correlation is that information asymmetries between different participants should be kept to a minimum, absolute minimum, which in turn calls for mandatory disclosure of material non-public information and simultaneous distribution of such information to the public. It needs to be communicated. Furthermore, the voluntary carbon market needs to be upscaled in order to significantly increase liquidity and the efficiency of the market. So as most of you know, the task force on scaling voluntary carbon markets, so TSVCM, is exactly working on this topic to scale an effective and efficient market. Furthermore, the task force orchestrates all parts of the value chain to work intensively together and to provide recommended actions. So Deloitte, by the way, is representing or represented in the expert panel of the TSVCM, which is great for us in order to discuss what needs to be done and what are the most pressing pain points facing voluntary carbon markets. On the next slide, I would give you a quick overview on the market development, as I said already at the beginning. So currently, the voluntary market for carbon credits plays a relatively small role in comparison to global emissions. So this is currently less than or around 0.1% only. Yeah, so as well as in comparison to the compliance carbon market. So, but the voluntary actions will play a significant role to achieve the Paris Agreement goals, as I said at the beginning. This will significantly increase. So market analysts are telling us that the emission reduction, which is required to achieve the Paris Agreement temperature goal, lead to an expected increase in the carbon market size by at least 15 times until 2030, and an increase of up to 100 times by 2050. So actually, we believe that it could be even more, looking at the activities which are currently running in this area. So the market for OTC traded carbon credits have grown significantly, as I said. So on the supply side, which you can see on the graph, the available credits increased 5 times since 2016, and this is consistently outpaced demand. And on the demand side, there has also been a rapid increase in carbon credit retirements. So from 2016, carbon retirements grew by almost 3 times. With the expansion of climate policy to industrial companies, where adoption costs are much larger than for utility companies, for example, the increase of global demand will be huge, as I already mentioned. So what does all this mean for the future direction of carbon credit markets? So if we go to the next slide, please. So in order to scaling up the voluntary carbon market, a number of key areas are critical for future success. So the first one is creating a common carbon credit feature. So this would be the main characteristic of credit quality, enabling faster matching between supplier and buyer. So currently, carbon credits are unfortunately heterogeneous, so each having its own features, and those inconsistencies and individual characteristics create, of course, friction that slows down the entire carbon credit purchase process. That needs to be fixed. The second key area for the improvement of the voluntary carbon market is to develop standardized contracts. So as more credits would become uniform, the creation of reference contracts would create liquidity, which is so important, and create a possibility for the purchase of a larger number of contracts. So a reference contract would allow the creation of a clear daily market price, and that's at the end the goal of all this. And furthermore, as OTC trades will continue to happen, reference contracts could, of course, be the starting point for the negotiation. Another point is the creation of consensus about the proper use of carbon rights. So this includes core principles, which I already mentioned, that would help ensure that companies are not taking an easy road. So the goal of carbon markets is to reduce the maximum amount of greenhouse gas emissions as possible and use credits when there is no other possibility to offset emissions any further. Establish a global trading and post-trading infrastructure that ensures clear and efficient processes. Data transparency and integrity of all parties involved is a prerequisite for investors to gain confidence and engage in the market, of course. Blockchains are the outstanding technology from our perspective when multiple participants, or whenever multiple participants are involved in the processes of data maintenance and updating according to binding predefined rules. And transparency, integrity of the data, of course. A final key area that would make carbon market trades more smooth is the clear demand signal which is needed. So when suppliers know that they will have a buyer who is willing to buy their carbon credit, will drive a supply up, of course. So the way of promote demand signal are to promote industry-wide collaboration, where different industries can set a shared goal in emission reduction or improve standards and infrastructure for the project developers, or impose widely accepted guidelines for carbon offsetting by companies, for example. But above all, it is a prerequisite for investors to gain confidence and engage in the market that a global trading platform ensures clear and efficient processes, data transparency, and integrity of all parties involved. Blockchain technology, fortunately, already meets many of the requirements which I mentioned and offers excellent conditions from our perspective for the implementation of a secure, transparent, and trustworthy carbon credit trading infrastructure. So looking at my last slide. So as I said, blockchains can be used whenever several participants are involved, and data quality and integrity plays a significant role. It's impossible with a blockchain infrastructure to manipulate or erase earlier transactions without at the same time destroying all following transactions as well. So blockchain technology can be used as an efficient means for keeping records on property rights and the transfer of such rights between participants. So this is due to the fact that its application enables the various entitlements of individual participants to be represented to tokens. Tokens enable to the secure storage of the underlying information and facilitates its protection against unauthorized access, counterfeiting, or theft. So, moreover, the decentralized manner in which the relevant data is held gives all interested parties with access to the system the opportunity to validate the information and the content of the database, and thus helps strengthening the trust of the stakeholder and the congruence of actions and results. So there are needs for an efficient, tamper-proof, and hence highly transparent price information process. The last point which I want to mention before I come to the closing remarks and we start into the discussion is that we see or observe currently that there is a huge race already going on a global level to establish the de facto standard or a trading hub in various regions. So in APEC, there are activities running from various players to establish a trading hub for voluntary carbon credits. In the US, there is an ongoing discussion, which you probably, or some of you probably know better than I do, on the same topic. And in Europe, of course, there are various players who are currently looking for a solution which might implement a trading infrastructure and to become the European hub at least. We are working on that as well. So if you look at the slide or the illustration of the slide, this is just an overview on our blockchain-based carbon infrastructure trading, or infrastructure for carbon voluntary carbon credit trading. So I'm pretty sure that we will see many exciting developments in the area within the coming months and upcoming years with regards to voluntary carbon credit trading. So I pause here, stop here, and hand over back to, and thank you very much for your attention, of course, and hand over back to Hubertus.
Yeah, Hans-Jürgen, thank you very much for that most insightful presentation. It's been full of topics, and I don't know where to start. The first questions are already coming in. The first question that came to my mind is, what role do carbon credit actually play today in financing of renewable energy projects or in other innovative technologies? Is there a number to it?
I do not have a concrete number, but if you look at the financing of projects, currently we are more talking about the instrument of bonds and sustainability loans and things like that. How do I get access to the capital market in order to finance my measures and my projects, which I plan to start? But nevertheless, so we are in conversations with not only companies, and we are talking to governments in terms of how can they use their advantages. For example, Canada, they do have a lot of forest. How can I use the forest in order to, yes, to launch carbon credits in this area and to trade them because yes, this would be another, let me say, revenue source for them. So it's a quite small number still, yes, which is, let me say, really related to
single digits. If you were to estimate,
it's probably below 5%, yes. So currently, but looking at the numbers and the growth, and I think this is, let me say, the important thing. The growth is double-digit every year by far, and it will definitely increase further. So we expect that this will be one of the major instruments in the future, in particular because net zero cannot be achieved only by reducing emissions. At the end, you need probably a lot of carbon credits in order to achieve your net zero targets. And for that reason, it's logic at the end. If you look at the different industries where, let me say, the remaining carbon emissions probably will be at the end. And if you translate all this into carbon credits, there is a huge demand, of course, for using carbon credits in order to achieve net zero for companies, by the way, as well as for governments.
What actually struck me most is your chart where you showed that over different types of sectors, the price has been varying widely. Was it because of different times when it was traded, or because as an economist you would expect in an efficient trading system that prices are converging? There is more or less the one price at which the optimum would be achieved in terms of allocation of the carbon credits. So is that just you mentioned transparency? Is it just a transparency issue, or are there other issues at play?
So there are other issues. I mentioned some of them or two of them. First of all, it's still fragmented. It's very poor liquidity in the market currently, which is an issue, of course, for price formation. And there are still, let me say, there is no common global standard for how do I quantify and qualify, at the end, the impact of the project. This is probably one of the biggest issues besides liquidity. And for that reason, it's so important that we scale up the entire market, that there is a higher liquidity in the market in order to get a more efficient market and to converge the price, because it's, of course, extremely difficult to invest into or to trade carbon credits if there is a difference of I don't know, $1 to $50 for the same project at the end, yes, or the same type of project. So we need common standards for qualification and quantification of the impact of the project, and we need a higher liquidity in the market. And so it's of course in a certain way a catch-22 problem, yes. So because to increase liquidity and activity in the market, you need a very trustworthy price formation process. And on the other side, without a trustworthy price formation, it's hard to increase the number of participants and the traded volume in the market. But given the fact that there are multiple activities running exactly for improving the price formation process, makes me at least confident that there will be a better price and more sustainable price formation process in the near future. And then the convergence of prices.
It should be key, yeah. I mean, with the price formation process would be key in the allocation. It's what the market is all about at the end of the day. Yeah.
Exactly. So of course, in the voluntary. Sorry, go ahead. Yeah.
No, I have a very interesting, very optimistic question here. We mentioned the energy crisis before. And at the moment, we see skyrocket pricing, and the question is, if you were to be given special powers, how would you turn that into an opportunity today?
The energy crisis.
Yeah.
So actually, I think the energy crisis is part of the acceleration, or let me start in a different way. So currently, most of the targets are set by governments. Yes, so there are milestones set, there are ambitions set. So we need to reduce or increase our renewable energy consumption, etc. So all this will probably ruled by the market much faster than hopefully much faster than most of the governments and regulators are telling us currently. And I think this is already in a certain way an accelerator, which might be an opportunity. So the energy crisis that companies and energy companies as well are thinking about what needs to be changed in order to to get, let me say, rid of such crisis. Yes, what can we accelerate and how can we change our consumption profile in order to be more independent or to stick to, yes, more renewable energy sources, etc. So I think the energy crisis is, I wouldn't say an expected crisis in the current transformation towards a more sustainable economy, but it will definitely, from my perspective, accelerate all or the activities around the transformation towards a more sustainable economy. Mm-hmm. And Excellent. This will not be the last crisis from my perspective. There will be, of course, other crises or large issues happening, which will, yes, change, hopefully, the thinking of some companies on their net zero or their sustainability journey, because there are still a lot of companies taking this more as a compliance exercise in terms of, okay, what is requested, what is needed from the regulator or from the government in order to achieve something. Yes, and then the direction of their activities are more based on being compliant to what is requested. And we, since the last 5 years, we see a constant change of taking this more as an opportunity and a strategic, let me say, opportunity to differentiate in the market, to change the business model, to be better positioned for the future, etc. And I think if this keeps going on, yes, that this is not considered as a compliance exercise anymore, and companies are thinking much more on the strategic opportunity, then the entire journey will accelerate from my perspective. And this is going on. That's what we see every time. Just to give you a quick example on that, because 2 years ago we were probably 80%, and we are working mainly in the financial services industry, only on compliance exercises. Yes, how do I meet the reporting and disclosure standards? How do I integrate it into my risk management framework, etc. Since the last 2 years, it's much more about the opportunity. So how can I integrate my net zero strategy into my corporate strategy? What does it mean for my business model, for my products? So this is a completely different discussion now, which is going on not only in the financial services industry, of course, in the other sectors as well, which makes me absolutely positive that there is a change going on, which yes, supports the transformation towards a more sustainable, yes, economy and future.
Interesting. Let's look a little bit about the lessons learned before Paris. There's a long history of OTC trading of carbon credits, but it only got traction after Paris. What are the lessons to be learned also for other countries, other jurisdictions that looking into carbon trading? And then let's talk a little bit also about where you see others are moving. Did they learn the lessons from the experience here?
So maybe let me start with the compliance market, because I think this is currently at least a bigger lever. To try to influence the activities by carbon price. Yeah, so a given carbon price, you mentioned it already, it's now 65 euros, etc. But there is still a front runner, which is Europe. I mentioned it already. There is 90% of the market volume in carbon trading is in Europe, and so we have a lot of conversations with currently the US, which are thinking about to increase their carbon trading efforts as well, and to influence the market much more by carbon price as well. So there are a lot of conversations going on, and maybe some or one of the participants in this call would like to comment on this, but there are a lot of conversations going on from a regulator perspective, from a governmental perspective, and from an economical perspective between Europe and the US on what can we learn from you? What are good practices? What are best practices? Where are the pitfalls? What needs to be avoided, etc. So from my perspective, there is already a global community which is looking after not only the aspect of carbon trading, sustainability in general, but carbon trading is a hot topic currently, and the same with Asia Pacific. So we are in conversations, for example, with Singapore, which tries to establish as I said already, a carbon trading hub as well.
China introduced in July. China introduced in July also a carbon trading market. So what's your look at those? I mean, if China enters that market, it's probably be a very, very important actor.
Absolutely. So as we all know, the contribution of China is huge in the entire equation of emissions and greenhouse gas emissions, etc. So if they would jump onto this as well, yes, in terms of this is a instrument to reduce our emissions would be great. But looking at the other numbers, so how many power plants they are planning currently, coal-based power plants, etc. So of course they need to get enough energy for their economy. So this is of course a challenge if you have I don't know 1.5 billion people, yes, so which you need to supply with energy. But nevertheless, so if the Chinese market is jumping on something, this is of course in most of the cases making a change for the others, yes, on a global level, because of the scale of the country itself.
Is it just the scale?
But nevertheless,
yeah. Is it just the scale, or is it more than the scale? Does it also have different elements of forming or managing the market?
So it's probably more, yes. So scale is of course important, yes, to have a strong voice already at the beginning, and everybody is looking at you. So your attendance is quite high. I think it would be more a signal, which is extremely important, yes, if they start to do something like carbon trading or more intensive, because this would be a clear signal that something is going on, because most of the, let me say, justifications and excuses of some countries are, we are too small, we can do whatever we like. At the end, China needs to move if something should happen. Or yes, so and I think, yes, as you said, beside that there is much more liquidity in the market and all these things, if China would increase its activities, I think it would be more a very positive signal to other countries as well, that there is a common direction of how to act towards a, let's call it net zero strategy, or towards a more sustainable, low emission future. So I think this would be the much more important impact probably than just the scale, as you asked.
Yeah. The next question is about when you're having a project that you're financing to reduce emissions, how do you transform them into carbon credits for yourself? How can you make them manageable? What's the process? What do you need to do as a corporate?
In order to issue carbon credits?
In order to generate carbon credits for yourself, yeah. So if you have a project for reduction, how do you generate the credits? How you get them?
Oh, this is a quite long process. No, not quite long process, but there are a couple of parties involved. Yes, first of all, you need a verifier who is looking at your project and what you plan to do with the project in order to quantify, as I said already, to quantify your emission reduction or your impact on the business as usual scenario. So that's what I said. This is the measurement at the end. So how much would you be better than the business as usual scenario? Then you need a certification agency. Then you need a standard, a global standards agency in order to create the credit at the end. So all this needs to be done before you launch it, which is important, yes, because you need certain clarity and transparency, of course, what exactly is planned, what exactly is going to happen, and in particular, how can I look at this on a time perspective in the way forward? Because, for example, if you issue a credit on reforestation, yes, you need to make sure that this forest is still, let me say, there and not flooded or already, I don't know, deforestation already. So so for that reason, there are a couple of solutions going on where you can track the activities of such a project, which is of course required. Yes, otherwise you would not get the confidence that this is really the impact which you expect. And there are a couple of things going on. If I just stick to the reforestation project example, so there are conversations going on, for example, with Google, yes, so that they use Google Earth in order to monitor certain parts of the world where projects are running, in order to look at them on a regular basis, whether the expected progress happens, yes, and whether the forest is still existing or not. So there are some measures going on and activities going on how to make sure that this is, let me say, happening as planned. But the process itself, it's verification, as I said, it's certification, and then you can issue the credit to the market.
Okay.
And there are, of course, a lot of requirements. Yes, if you go to the gold standard, for example, they will tell you what needs to be done in order to be able to issue a credit. And this is not a super easy way, yes, because you need to fulfill certain requirements before you are able to issue something. Yes, so from transparency down to qualification, etc., and quantification, as I said. So, but it should be easy. It's relatively easy. It will become more digitalized in the future, which is important to become faster. But the process needs to be, of course, be in a way that there is not a too high burden at the beginning already. Yes, to think about such a project.
Mm-hmm. The next question is about the long-term impact. Would it eventually demotivate? Is it too easy a way out to purchase carbon credits rather than continue the motivation for R&D to reduce emissions?
Yeah, we are currently in multiple conversations with political parties, yes, in order to motivate them to talk with us about voluntary carbon trading. And this is one of the, let me say, the most discussed topics. Yes, is this really motivating or incentivizing companies to reduce their emissions, or real emissions, by the use of technology and by changing their supply chain and their value chain, etc., instead of just buying credits? And for that reason, we need definitely a very strong linkage and probably regulation between emission reduction and carbon offsetting. And so currently we are working on benchmarks for sectors. Yes, because how do you know, or how do you can assess, let me say, if a certain company or a certain sector already achieved, let me say, the bottom of the reduction possibilities? Yes, this is of course not an easy task. For that reason, you need a certain baseline, a certain benchmark to compare against, in terms of, okay, look, your peer group is able to reduce emissions much more than you did. So there needs to be further possibilities to reduce your your emissions before you enter or buy carbon credits. So the linkage is very important, because otherwise there is always, let me say, the discussion around, yes, actually greenwashing. So this is just another opportunity for companies, in particular in the developed countries, an opportunity to tell the world a net zero strategy and net zero story without reducing their emissions as much as they can or could. Yes, so this linkage is very, very important, and this in a certain way needs to be, I wouldn't say regulated, but there need to be some benchmarks and some measures behind that in order to, yes, to make it more transparent to everyone, if they already did everything which they could do in order to reduce emissions.
Yeah. You just mentioned you're in discussion with various parties, political parties. So I suppose some of them are based in Germany, and as we form a new government, the process of forming a new government at the moment, and there is an agreement paper which has been published a few days ago. Do you already see a glimpse on which way Germany is going? What role carbon trading is eventually going to play in the strategy of the new German government, an up-and-coming new government?
Yeah, as you know, and maybe some others in the call know as well, so there is from some parties a clear commitment to carbon price as a instrument to control and to manage emissions and to run them down. So there is a certain commitment already on carbon trading in general. On the voluntary carbon market, there are, from my perspective, there is a huge interest because it combines actually two topics which are quite important from a political perspective. One is to have a clear agenda on climate change and how to face climate change, and the others, at least in Germany, or in particular in Germany, how can we accelerate the digitalization in Germany? And actually, as I said, carbon credit trading pushes innovation at the end. Yes, because it will finance projects which are probably technology driven, and this is innovation. So from a political perspective, carbon trading covers both. Yes, so digitalization, innovation, and climate activities. So which is perfect for them. Yes, because these are exactly the topics which they need to have on their agenda and where they need to show action. And for that reason, so they are quite interested. It seems to me a little bit too slow that we are really running into implementation or more concrete activities. This is probably because the election is not that, let me say, long ago. Yes, so and it's not already done. Yes, as you know. So currently there are more looking at founding an administration, but looking at the other countries, and this is exactly what we are telling them. Look, if you wait too long, other countries in Europe and other countries outside of Europe will push this topic much faster than you, and probably you will be late at the end if you want to play a role in this game, because we are very convinced that there will be probably 3 trading hubs in the world, one in the US, one in Asia, and one in Europe. The question is, which one will be in Europe? Will it be a German one? Will it be a French one? Or will it be, hopefully, a European one? Yes, so we talk to European politicians as well, of course, because at the end, we don't want to have discussions with Germany and France and Italy and other countries of the European Union. We want to talk or consider this from a European perspective, because at the end, in order to be competitive in this market, we need a European hub and not a French, a German, and an Italian hub. And for that reason, we try to put this on a European level in order to make them, yes, aware of the opportunity and the risk if they want to play a part in this area. So, but they are all interested, let me say it in these words, but we need a little bit more traction now because, as I said, other countries are a little bit faster than we are currently. And
which countries are you thinking of when you say others are faster?
Yes, at least if I look at so they are still behind us, but as I said already, the activities which are going on in the US, which I see, yes, so they are from a, let me say, maybe not from a mindset perspective in terms of that the majority is absolutely convinced what needs to be done in order to save the planet or whatever, but from a technology and innovation perspective, they are of course much faster. Yes, so because there are very smart people already thinking about solutions, starting to implement solutions. There are already proof of concept projects running, how such an infrastructure could work, how a trading platform could work, etc. So we do have concepts. We do have let me say, many concepts which are quite good as always. But at the end, you need to implement it, yes, and to get traffic on this, and the same a little bit not faster than we are from our perspective, but the same is going on in APEC, as I said. So, but yes, so we need to be careful not to, let me say, to lose in a certain way our current advantage on being the front runner in this topic. But nevertheless, I don't want to have a race on that. Yes, so because at the end we need a global system for carbon trading, and I don't care whether one is the leading and the other one is the follower, a following country. At the end, we need a functional marketplace. But nevertheless, if you are the first mover, you are the one who will set the standard, and you are the one who is able to influence the direction, of course. And there is a certain interest, of course, from Europe as well, to be the standard setter in this area on a global basis.
Yeah. We're reaching the final line and the last question, Hans-Jürgen, and it's a very complex one. And nevertheless, I'll ask you for a quick answer. Is it reporting, is it verification, or is it measurement? Which of those three is the area where you see the most urgent attention needed?
Of course, you wouldn't expect that everything is extremely important, but if I need to choose one, I would say measurement is probably the one who is the most important one currently, because this is about getting a common standard, common global standard, how to measure. And this is not only in carbon credit trading, this is in general when we talk about sustainability and sustainable finance in particular. This is, from my perspective, the most pressing topic. How do we get a common global standard which everyone can, let me say, orient themselves? Yeah, so for that reason, measurement would be my answer here.
Measurement, and eventually ISSB would have to play a role in that definition of what the standards are. Hans-Jürgen, thank you very much. It's been a very insightful morning, and once again we'll see technologies left, right, center, and everywhere. It's key for developing these new markets and getting ahead with it. We all, I think, fully agree that there is no alternative but to curb the CO2 emissions and reach the net zero goals as soon as possible, to the benefit of ourselves, our children, and future generations. So Hans-Jürgen, thank you very much for your insightful presentation and discussion afterwards. Ladies and gentlemen, it's been wonderful that you've joined us this morning. Stay tuned on the topic, stay tuned on what Hans-Jürgen is going to publish on the topic, and hope to see you soon. Thank you very much for joining us today.
Thank you. Bye-bye.